Welcome everybody. This is Trevor with MarketDelta, and I want to welcome you to our special webinar entitled Market Profile 1-on-1 101 by Dr. John Keppler. Just some of the formalities. The event will be recorded and posted to our YouTube page probably tomorrow. You'll be emailed a link to it so you can come back and review in case you have to leave early or anything like that. If you have any questions, just type them in the questions box, and I will be posing those questions to Dr. Keppler a little bit later on in the hour. With that said, though, I want to turn it right over to him so he can get started. So, thanks, John.
You're quite welcome, Trevor. Good afternoon to everyone, and let me just do a quick sound check to make sure that everyone can hear me, so please type in the usual letter Y to confirm that you can hear me. Okay, good. All right. The title of our presentation today is Market Profile 101, Applying the Basics. I don't want you to be fooled by the academic title of the webinar. The content is really very practical and application-oriented, even though the title may sound a little academic. Now, the Market Profile 101 webinar series is a series that I'm only doing for MarketDelta, and in each one of those 101 sessions, what I like to do is basically focus on one of the key concepts involved in the profile, or in using the profile, and then we look at how we can apply that concept and basically develop a trading strategy around that concept. Now, before we get started, I will state the usual disclaimer about trading, that trading involves high levels of risk, and none of the results or items that will be mentioned in this course are intended to offer any sort of future guarantee as far as what might happen in the market. Let's continue on and talk a little bit more about one of my favorite topics, which is profiles. Basically, the concepts that we will be looking at in this webinar series all have to do with the profile chart and different profile structures. And just as a quick review, I would like to remind everyone that the profile chart is really built as a direct result of trading activity. And thus, that makes it very unique, and the kind of information that we can get from it is information that we're not going to find anywhere else, because this is information that's coming from actual market activity. Now, each profile structure, once that activity concludes, gives us also very important information about the market in general, and certainly market participant behavior. And the key question is really how to interpret that information, and more importantly, how to use it in order to be able to develop a profitable trading strategy. On this slide, we have a number of different profiles here, and let me go back to that one, but let me grab my pen. Okay, let's go back. We have a number of different profiles on a lot of different lines, and naturally this can get quite confusing. Now, my approach to using and learning the profile is a piecemeal, or little by little. You don't want to sort of take a big bite too quickly. You want to look at it and look at each piece and learn the particulars about each of those pieces from the profile, and then build on that. So when someone comes to the profile that is new to the profile, and they try to tackle it all at once and to sort of make sense of everything that's on the chart, that can be somewhat of a difficult task. Now, this is why we are now going to focus on a single profile. And before we even focus on this one, let me tell you that a profile is usually most useful once it's completed. Once it's completed, I have a number of key reference points on that profile from the session that was completed. I begin to use that information for the following session. Even though when I'm looking at an active session, the profile is evolving and being developed, to a large extent, it still is not complete, and it is difficult to try to extrapolate or make a lot of decisions based on a developing profile. So the key point to make here is that a completed profile is the most useful profile for us in terms of our analysis of what's going on in a current and active profile. The concept that we will be looking at together today in our session is the value area. Now, this is one of the most unique features about the profile, and certainly I'm not aware of any other type of chart that will identify for you the value area for any given trading session. In this particular case, the trading session that we are looking at happens to be an evening session, and we've identified the value area here on the chart right here. And the nice thing is we don't have to do any calculations, we don't have to really do any effort other than be able to read where the value area is on the chart. The software or the platform will do that for us automatically. Now, since the value area is one of the most important concepts that the profile gives us, we need to get a little bit of understanding about what that value area is and what it means, and then we're going to talk about how we use it to develop a trading strategy. First of all, once the value area has been identified, and really it is the area with the greatest activity that has occurred during any given session. That is the definition of the value area. If you want to look at the statistical definition, it is the area that contains approximately 75% of the session activity. That's how we define the value area. Now, why is the value area so important? Well, since the profile is really a normal distribution of the activity that is taking place during a specific session, and we are able to identify about 75% of the activity and where it takes place, what's important for us to recognize is this is the area where all the action was. This is where most of the participants in the market exchanged or traded during that session. And this is significant because as price begins to move away from that area, that is very noteworthy, and that's what we're going to begin to talk about and focus our attention on. But before we leave the concept of the value area, I want to highlight for you that each value area has a value area high, which is really, in this case, the green line that we see here, and a value area low down here. Now, if you notice, my actual bracket actually extends a little bit lower, and I did that intentionally because I wanted to draw your attention to the orange lines as well, and to point out to you that every profile gives us two different value areas. There is an activity value area, or a value area that's defined based on market activity and TPOs, time price opportunities, and there is another value area which is created or based on actual volume that is traded in the market. Now, quite often, both of them will overlap, as we have in this case on this particular session, but sometimes we will see that there will be a little bit of a variance between those two. Now, when that variation occurs, that's one of the other key concepts that one has to learn and understand and interpret and so on, but that will be hopefully for another lesson. Let's take the very basic value area and how we would apply that. All right, now that we know where the value area is and we know how to identify it, what is the significance of that? And the significance is the value area identifies for us, or easily identifies for us, potential trading opportunities. And here's a very simple rule. Potential trading opportunities will occur whenever price deviates away from value. All right, so as soon as price moves away from a predefined value area, we know that a trading opportunity potentially exists here. And the key is to sort of analyze this opportunity to try to determine which way the market is going to go and what is really going to happen at that particular point. For this specific evening session that we're looking at together, I'd like you to note where the close of the session is. In the evening session, the price closes below the value area low. And right here, here's my close. We've highlighted it, and it is below the value area. So if the rule I just stated applies, then what this is telling me is there is a potential trading opportunity at this point in time because price has deviated away from value. Now, the opportunity could be that price may potentially move right back into value, or price could conceivably continue to move lower. And this is what we are going to focus our attention on in our webinar today. Once these opportunities occur, how do we determine which way the winds are blowing, if you will, and where is the market likely to go? And in that process of interpretation, we are actually going to employ and use some of the other key tools that the profile offers us, and specifically we are going to be looking at some footprints. All right. Now, I look at the next day and I take a look at where the new day session opens. Because naturally, when it closes here, as I told you, it could go either way. Potentially, price could move right back in to value, or price could continue lower. Now, the new day session opens, and remember, always the new day session is often more volatile at the open, and the new day session usually has a lot more volume and is by far more active than the evening session. Unless, of course, there's unusual news or an unusual event. Those are the general rules that distinguish the two different types of sessions. So let's take a look now at period A, which is really the very first period. Now, this is a developing profile. And notice, I am analyzing the new day session, or the developing profile, relative to what happened in the previous session, to try to determine where the trading opportunity might be. Because of the volatility at the open, quite often it is prudent to wait to determine the direction of where the market is likely to move rather than to jump in quickly. There are some times when it does make sense to jump in quickly. In this particular case, this was not one of them. So we wait. Some people will even wait for the entire initial balance to form, which is the entire first hour before they will take a trade. But let's take a look together at this A period and what it tells us after the first 30 minutes of trading occur in the marketplace. Well, naturally, we open right at where we closed. And then notice, prices drop down to here, and they are halted, and this is our 50% increase from the prior initial balance of the prior session. And then the price shoots up higher, and it actually takes out my point of control, another important concept from the profile, and it continues higher, and it actually takes out my value area high. Now, looking at this, does this really give me enough information to act upon? And my answer to you is, if anything, it would probably give you somewhat of a bullish bias, because of the fact that prices were able to shoot all the way up beyond the value area high. However, for me, this is not enough yet. I would like to learn a little bit more before I'm a very conservative trader, so I want to know a little bit more before I actually initiate my trade. And so let me share with you what other things I'm going to look at and be looking for. Naturally, I'm also going to look at the shape of the candle for that A period. And the candle here gives me a very interesting shape where I have a very long wick above, and then I have another wick below, but it comes all the way back up to here, to this area where I seem to have had a little bit of a price breakdown and price dropped. So as if it goes all the way up to test it, but it never really clears this particular range. So that gives me, even though from looking at the extent of the move during that 30-minute period, and it did create somewhat of a bullish bias, by virtue of the fact that there is a big wick on the candle and we didn't quite clear this point of breakdown, if you will, that had occurred earlier, I'm still somewhat skeptical about what to do, and I need to look at more data to really help my decision-making process. The next thing I want to look at, and this is very important, here it says VPS because the indicator in MarketDelta or Investor RT that will allow you to display the volume point of control is known as the volume price statistics indicator. And once you put that indicator on the candlesticks, it will show you the volume point of control, VPOC, for the 30-minute period. And this is really quite significant for a number of reasons. First of all, it shows me if in fact we had a lot of volume, where did it occur in that price range? And since it occurred here and we ended up closing below it, even though we had a very strong bullish burst, it still would make me a little bit skeptical or a little bit cautious about a bullish entry because of the fact that the price ended up closing well below the volume point of control. So let's take a look now at the actual determining factor, or the deal breaker or maker, if you will, and that is the footprint. The footprint now is going to help me immensely in making this decision, and it is going to help me because I'm going to use another very important concept that comes to us from the profile, and that is the concept of being able to determine the direction of the market based on where the market is facilitating trade. The market always facilitates trade in the direction of volume. So if in fact your volume is starting to dry up, then that particular direction is not going to continue, or the movement in that direction is not going to continue. However, if you continue to see an increase in volume in a particular direction, there is a great likelihood that the market will continue moving in that direction. So let's now apply this other concept to our nice footprint here and see how we can interpret from the footprint what is going on. The first thing I want to direct your attention to, I want you to look at the volume at the open of the period. Right here, and the footprint makes it very easy for us to do a simple calculation, and we've identified 1,064 contracts at the open. The next thing I want you to do is to take a look at the volume at the close. All right? Easy again. We're going to add the volume at the bid and the volume at the ask for a total of 5801. Now, which direction is the market facilitating trade in? Am I seeing more volume as we move higher, or am I in fact seeing more volume as we move lower? And it should be quite intuitive. This is about 5 times the volume we see it at the close than we do at the open. So this reaffirms my initial bullish bias, and then this other elements that sort of are somewhat distracting, like this big long wick that at first made me a little frightened, now begins to lose significance, because the volume, which is a very reliable indicator in the market, is indicating that the market is facilitating trade to the upside. Not only that, I take a look at my volume point of control, and up here I have even more volume than I do at the close. So it becomes far more evident than it was to me before that the market has a strong bullish sentiment. So now the value area identified for me the existence of an opportunity, and the footprint has helped me analyze the potential direction for that particular opportunity. Should I be taking a long or should I be taking a short? Now, I'm going to add some additional other elements to even reaffirm for you your hypothesis from the footprint. We are now going to look at the delta at the open, and the delta is simply a calculation. We look at the difference between the number of contracts that were traded at the bid relative to the number of contracts that were traded at the ask, and if in fact we had more contracts being traded at the bid than we did at the ask, we are going to have a negative delta. If in fact we had more contracts traded at the ask than we did at the bid, then we're going to have a positive delta. So if we look at the delta at the open, we had a negative delta, and then naturally we need to take a look at our delta at the close and take a look here. Not only do we see an increase in volume at the close, but we see a positive delta and a significantly higher positive delta than we do at the open. This gives me another reaffirmation of my original hypothesis that we have a strong bullish bias here, and the market is likely to move higher based on what we are seeing from the data. This is how we sort of take a look at the profile, at the different elements, and piece them together and add them to help us make our trading decisions. Now, in addition to that, I am going to now share with you another indicator that I like, and perhaps I should highlight why I like it, because I designed it, the KVT, and show you how much more information the KVT will now add. I gave you some of the basic things, but now let me show you the power of the KVT. But before I can demonstrate for you that power, I need to spend just a couple of minutes explaining to you what the KVT is and what it does. The KVT is the acronym for the Keppler Volume Tracker. And we've already talked about the significance and the importance of looking at volume in the market, because really volume is the fuel that moves price, that creates price movement. And we all know that it takes significant volume quite often to move the market, unless of course we are in a thinly traded market such as the evening session or so. But as a general rule, an increase in volume is going to have a significant impact on the market. And so the premise of the KVT is I would like to be able to identify for myself price levels where all of a sudden we have significant increases in volume. That is basically what the KVT does. And it does so by looking at current activity, and it compares it with a number of days in the past, and it traces and looks at the different activity levels, and then it also evaluates it in terms of two different parameters. How significant is significant? Is it just a little bit over or a lot over what normally we are likely to see during this time or during this particular period? And that's why it highlights the price level with two different colors. The magenta color actually is what we call the level 2 volume, which is a highly charged or a significant increase in volume, far more than the green. So the green is significant, but the magenta is twice as significant, if you will. And that's why you don't quite see as many magentas as you would the greens. But they're both important because they both tell me that there are traces or footprint traces here of major participants in the market that are likely to influence and impact price movement in the marketplace. So here in this particular area, I see a significant increase in volume. And look at how this also took place above the close, and the delta on all this activity is positive all the way up to the top of the range. So some significant trading took place in this particular area in the market. And now when I go back to my profile, and we will do that in a moment, you will see that this was right below the value area high. The value area high was right up about here, and I'll show you that in one moment. And this volume is occurring right below it. This is characteristic usually of a breakout that is about to occur. Now, this is the type of stuff that you will learn from experience, because you will watch these types of occurrences in the marketplace, and as you begin to see them repeat themselves, the patterns, it will become evident to you. When you see a large cluster of positive volume, positive delta volume before a key level in the marketplace, and even though it may not break through on the first try, this is a strong attempt or a strong indication that we are probably going to see a breakout take place. Now, the level 1, as I highlighted earlier, is the green. The level 2, we have one of those here right at the volume point of control. That's the magenta. And by the way, you can change those colors as far as the settings go in MarketDelta or Investor RT. They allow you to do that. So if you don't like these colors, you can change them to any color you want. But the most important thing to do is to be able to distinguish between level 1 and level 2. And you do that also by the settings in the indicator. There's a multiplier for the setting. If you make the multiplier much higher, then it shows you the extent or the degree of variation between the two different levels. You're able to adjust that as part of the indicator. Now, let me show you, as we continue on, something else that the indicator reveals for us. Take a look at the movement of these large clusters of volume. We look at them, well, we had a little bit here, and then we had some here, and basically when we had this large volume here, prices started to drop. And look what happened with the increased level or the significant levels of volume. As they move lower, so does price with them, reaffirming to you the rule that I stated earlier: the market will facilitate trade in the direction of volume. And the volume kept on moving lower and lower. Now notice, for the first time, this cluster here is higher than all this prior activity. This is the first time that I begin to see significant volume levels above this past pattern. So that also gives me the confidence and gives me an additional confirmation based on the hypothesis that I have that we have a bullish sentiment in the market now, and the market is likely to move higher rather than lower. Now, this is again the value area high from the chart, and also a key point that we can identify simply because we had a volume point of control here, a volume point of control, and look at what happened once prices dropped below there. They continued to move lower and lower. So this becomes a level of resistance, if you will. Okay? So we know that this is a level of resistance, and we're not going to be able to move much higher until we're able to break through that. And it looks like we are setting up to do that right now. Now, I mentioned to you earlier that we are going to look at the profile in tandem with the candlesticks. This is another feature in MarketDelta and InvestorT that I just love. The idea of being able to display my profile on my candlestick chart. It is an invaluable tool when it comes to trading, to be able to see the profile and to look at the candlestick activity. And here we simply have a 30-minute chart for the ES Mini. And I have 3 different volume profiles in the background. These volume profiles are easily put on the candlestick chart using the profile indicator. If you notice, once again, we have a value area high and a value area low for each profile. But by being able to look at the prior parameters from the prior or completed profile, it really helps me again to identify potential trading opportunities. So for instance, in this case, take a look at what happened here. Price deviated away from the value area low, and then in this case it deviated right back, or it moved right back into it. And it came up to the volume point of control. It went up even higher for a test of the value area high, and then it dropped right back to the value area low. Now, during this session, this particular session here in the middle, which was an evening session, it continued to stay between the volume point of control and the value area low from the prior session. Notice now how having the profile on the candlestick chart begins to show us a great deal of clarity as far as what is going on relative to the key parameters from the profile. And once again, we weren't able to penetrate the point of control from this prior session. We drop back to the value area low, and it continues to hold, and then we take off higher from that level. And in this case here, we were able, in fact, to break out from the value area high of this prior session there. So, as we mentioned earlier, we're never looking at any single profile in a vacuum. We are always looking at the activity of the current profile in the context of what happened previously in the marketplace. This is very, very helpful for us to do and to use on our charts. Now, here I have the footprint and candlesticks, and I also have the lines from the profile indicator. Now, MarketDelta will easily allow me to do all that. It takes a little bit of time to put it together, but it is really a very easy chart to assemble. All you need to do is add an instrument for the footprint in addition to the candlesticks, and invoke the profile indicator, and you will have a chart just like this one. And of course, on this one, I also have the KVT indicator shown as I had shown you a little bit earlier. The one thing I want to draw to your attention is that if we're looking at this activity here, we wouldn't be able to see at the time that this candle is formed, we're not going to see the complete profile for the day. So you see it on the chart here because this is after the fact, but in reality, if we're looking at a live market, that whole profile would not have been developed yet. But nevertheless, what I like to show you now using the footprint is what is happening at the value area high and the value area low and the value area high in terms of volume. So the footprint actually visually shows me exactly what the volume levels are at each of these key profile levels. Now take a look here, for instance, when we had a significant increase in volume right before the value area high. As I mentioned to you, this is usually a prelude or an indication that a breakout is likely to follow. Okay. Now, keep in mind that the footprint is an integral and a very important part of this analysis, and the footprint you will only find in MarketDelta. Now, once the new day opens, and now I have the full initial balance, I want you to take a look and see what actually happened. We knew from our analysis that the market was bullish and was likely to move higher, and look what it did. Period B actually takes off, exceeds the range of period A, and actually takes out the high of the whole evening session. So the analysis that we've been doing and the parameters that we've been looking at were actually accurate and helped us in determining the potential direction. This is period B in candlestick shape. That's the next 30 minutes, and now we have our full initial balance, if you will. Initial balance is another very important concept, and I hope that we will visit that in one of our future 101 sessions as well. But let us continue to focus on the footprint and the value area extremes and look at the dynamics of an actual trade now. We talked about the concepts, how we're applying them, but let's take it a notch further and look at how we develop a strategy based on all of these different variables that we've discussed together. The dynamics of the trade, if you will. Well, I think we had done enough detective work, and based on the information that we had garnered from the footprint and the KVT, that we had a strong bullish bias. By the point that this first 30 minutes was completed, I had a strong bullish bias. Now, remember, in the market there are no guarantees, so naturally I am going to also look at risk management, but at least I have established my bias. So I am ready to enter my trade at the open of period B. Now, you might ask, well, price may drop lower. Yes, price is likely to, or may drop lower. However, I am comfortable enough with the data that I have assembled that gives me this bullish bias that I will enter at the open. And then our next step will be to take a look at where we would look to put our stop loss. And our stop loss, the best place for it would be usually right at the area where you saw the last intense volume activity. So I rely on the KVT to help me determine where my stop loss would be. Now, by virtue of the fact that I had a short or a short distance or a minor exposure, if you will, only about 6 or 7, maybe 8 ticks at the most, this was a comfortable trade that I would take. Not great exposure and great potential, and this is why I would enter at the open and place my stop. Possibly even sometimes if you don't do it right on this lowest level, you may want to put it as low as right about here, the range low of the evening session. Sometimes some traders will like to give it just a tick or two beyond the actual limit, because that's what will happen. The market will dip, and it sometimes just dips a tick or two, but you want to give it a little bit of breathing room rather than make it too tight. So let's take a look now at our target. Well, a very easy and reliable target is our value area high. At minimum, if my hypothesis is correct, now I know my downside. Here's my exposure. Now, if I go up to the value area high, that would be my first target, and my exposure is about half. This area here is about half of my potential target. This is a nice trade, a trade that would be worth taking intraday. So for an intraday, this would be a great trade to take, high probability and a good risk to reward ratio. And this, of course, I didn't complete the acronym, my value area high. That's my first target. On this type of a trade, once I begin to see that the bullish momentum will continue, I may begin to include multiple targets on the trade, and even perhaps add to my position in the trade. But as a starting point, as a conservative starting point, if you will, this would be my initial target. Because if in fact we can't make it all the way up to the first value area high, then certainly that breakout I was expecting isn't going to happen, and my hypothesis was either incorrect or perhaps something has changed in the market. Our hypothesis may be correct based on what we're seeing at the moment, but we all know that markets are extremely dynamic and things can change at any instant. And so if that's the case, then I know that this is my potential target, and I must always have my risk management in place. So this is where I would place my stop loss. Now let's take a look at what happens in period B, and take a look at how the market continues to facilitate trade and what volume is doing in period B. So here is my period B, and if I had begun to act on the trade and bought and went long right here at the open, yes, the market did dip a little bit below, but notice it never actually went below this particular stop that I had in place. And usually the KVT is very helpful that way, because if you think about it, the heavy participant, or the participant with the wherewithal that is now buying at these different points, will protect their investment. If they're in fact planning on pushing this market higher, if prices were to dip back to this point, and they are in fact intent on pushing the market higher, they're going to protect it, and you will see prices move higher yet. However, if this participant now is not going to protect this particular level, then I might as well be taken out at this particular stop. Now, let's see what happens. Actually, it only ticks 1, 2, 3 ticks below my actual entry, which is not bad at all. And it continues to move higher during period B. And notice what happens as far as KVT. At these same exact levels, I begin to see additional volume come into the market. And this time, the volume is sufficient to actually push further, and we take out the high of the prior period. But the good news is I have already, within the first 30 minutes or the next 30 minutes of the market, I have met my first target, and the market continues to push even higher yet. Now, here's another interesting point. And the point is, notice what happened. We have a new trade opportunity. We are now outside of value. Remember, value area high, value area low. This is the value area of the prior evening session. And this trade that we took here was really based on the fact that we looked at what happened when price had deviated below value and noticed this strong upsurge, and it helped us to make a little bit of money. So the basic concept in the back of my mind that I'm looking at to identify opportunities for me is this idea of the value area. Now, prices now have shot up above the value area. The question that I have is, are they going to continue to move higher? Okay, the opportunity exists, and my question is the market going to continue to move higher, or is the market going to revert back, and are we going to see it move back into value? Now, the same exact analytical process that we just used together to come up with the bias here, I would again implement and I would use. I would begin to take a look at the open and the close and the levels of volume for this 30-minute period. I would begin to look at the deltas, and I would also begin to look at the levels of volume as the market is moving higher. Is volume significantly decreasing as we head higher, or is it increasing? For instance, at the high of this range, it looks like we had about 70 contracts here. Now we're at 853. That's about 10 times more. To me, that is a market that is facilitating trade to the upside, and the bullish sentiment seems to be strong during this particular day session. So if I had taken my profits and I'm out of the trade and I see this, I may now consider thinking about coming back into the market with another long trade. And really, I cleaned up the chart again to just re-emphasize for you that now a new trade opportunity presents itself once again. Why? Because price has deviated away from value. Not only that, if you notice here, we have now closed above this level here that was a prior resistance level and caused the breakdown. Now, some of this activity that you're probably seeing here, or this additional volume that's pushing higher, what happens is a lot of the traders that in fact perhaps may have taken a short position up here and were in the position short, where do you think they are likely to cover? Well, they are probably going to cover somewhere up here as we begin to approach the value area high. When they begin to cover, they're going to have to buy to cover. What does that do? That actually strengthens the move higher, because there is additional buying coming into the market from any traders that were in short positions, and then they were trying to cover their positions up here in this area as we have moved above the volume point of control and as we begin to approach the value area high. So these are the dynamics that you would look at, and the KVT will always really help highlight for you these key levels. And whenever you see, again, clusters of significant volume before a point of resistance, or by the same token at a point of support, they are important to pay attention to, because they're likely to give you a clue as to what might happen in the market. Now, the question is, are we likely to continue higher or return back inside value? You really don't have a lot of, we haven't done all the calculations, we don't have all the data here, but just based on the strength of the move, the market is likely to move higher at this juncture rather than back into value. So let's take a look now at what happens in the market. And so this is our period A for the day session, period B for the day session, and period C, and there's period D. Okay. Sure enough, period C does take us higher. Now, I want you to note the KVT volume direction. What is happening with the K? Remember when I showed you how volume was the KVT was indicating we were moving lower. Now, take a look at what the KVT is showing now. At no point have I begun to see significant volume lower than the volume that preceded it. This is still a very bullish sign in the market, and as a matter of fact, this is another use of the KVT. If I'm in fact in a trade, it helps me to decide whether I could continue to stay in the trade or whether it may be time for me to get out of the trade. If I begin to see large clusters of volume forming, say, below this level up here, then I would definitely be thinking about getting out, because that's showing there is a change in direction with significant volume. So here we have a negative candle. Negative candle in a sense that we closed below the open. But take a close look at the volume parameters. The volume at the open versus the volume at the close. At the open we had, I've written over it so I can't quite see the numbers, but certainly 8,000 plus maybe another 6,600 there, significantly higher than 1483 plus 1055. So this would tell me, even though I had some profit taking or some negative pressure at this juncture, I am going to continue higher. The market is still facilitating trade to the upside. And again, as I mentioned to you, I don't see any significant KVT changing direction on me and moving lower. All right. I think we have covered a lot of territory even in this short period. And the purpose or the objective of these one-on-one series webinars is really to help you apply some of these basic concepts piecemeal, little by little. And as you begin to practice them, and as I recommend to any of my students, always practice with your demo before you go live. And once you've mastered a particular skill or strategy, then that's the time to think about going live with it. Now, I like to leave a little bit of time at the end of the presentation for some questions. So let me see if we have some questions we can tackle.
Yep. Go ahead, guys. Type in your questions if you have some, and I'll pose them to Dr. Keppler. Although, John, if you see any, feel free to grab them as they're coming in.
Okay. All right. The first one, someone asked about how we do the overlay candlesticks on the bid and ask, and MarketDelta has a great presentation on that. I think there's even a video of how to do that. It's really quite an easy task. So and I think Trevor posted the link to that. So
yeah, I just reposted it. So if you're interested in how to do those overlays, that link there has a video and a bunch of chart definition samples.
That will be great. Can I increase the size of my point? Well, that's a little late for that one. On the next presentation, I promise you I will do that. Increase the size of the point. On the price of 1680, weigh the divergence on the bearish side, then the rally? I don't understand that question. You may want to rewrite that question. On the price of 1680, I didn't get that. Will the KVT work with MD standard charts? With MarketDelta, the KVT works with all, with the exception you can't put it on a profile chart, but it'll work on any time chart in MarketDelta. Can you use it on 4 times? I don't know what that means either. I like the question, is there any way to simplify the whole thing by just generating buy-sell signals with profit stop targets? You know, I smile at that question because, you know, if trading was just as easy as being able to follow a signal and always make money, everybody would do it, and you know, it just it would be too easy. So there are ways that you can create some signals, but even any signal that you create has to be in alignment with the market condition. So there is no one-size-fits-all, or there's no rule that will work in every type or every condition in the market. It is very important, even if you're going to design and generate signals, to sort of understand what types of markets they will work in, whether this is for a trending market, non-trending market, and those types of things. And anyone that will tell you there is a signal that will work in every type of market is definitely not telling you the truth. If you have a rising value area, is this a sign? Up move, accumulation. Certainly, if your value area high is moving higher, that is an indication that the market is moving higher. Your market profile looks different. How do you do that? That's a good question, but I don't know different from what. You may want to send me perhaps a chart of your market profile, and I can see how mine is different from yours. I can then guide you as to how you can generate that profile. But I will tell you that every single chart that I have used is from MarketDelta, and all the tools that I have used to generate everything I have shown you are available in MarketDelta. Where's the KVT indicator? Okay, where is the KVT indicator? In a special package? No. The KVT is included in the indicator called multiple price highlighter. So it's a standard indicator. There are no extra fees for it. It is part of MarketDelta, and anyone that has MarketDelta has access to it. Okay. Please explain the KVT again. All right, I will try to explain it to you briefly. It is really conceptually a very simple indicator. The whole premise of the KVT is to track when significant volume comes into the market. And now, since the word significant is somewhat nebulous, if you will, I thought that we have to also define different levels of significance. And rather than have 10 or 20 different levels, I thought we should at least have 2 levels of significance. So the KVT starts to look during each time period, and by the way, it will only work on time charts, and look at this particular time period and compare it to other previous time periods and take a look at what the average traded volumes are during those periods. And then it looks at what do we have now that is being traded, how different is it from the levels that we tend to see in the past. And then if it is level 1 significant, meaning it is more than what we see in the past, but not by that much, or is it level 2, meaning it is a lot more than what we would normally see during that period. That's the conceptual framework of the indicator. Now, how do we use it? The key concept that makes volume important, I stated it in our webinar, and that is the market facilitates trade in the direction of volume. Volume is the fuel that moves the market. And so by being able to identify price levels where there is significant volume activity, it really helps me to analyze what is likely to happen in the market. And I hope that that brief explanation helps you with it. Okay, I have a bunch of more questions. I think I may have time for a couple more.
John, there's a few questions that revolve around using the KVT and some of these ideas with Forex markets, spot Forex.
Okay. The KVT, as long as you're using a time chart, will work even for the spot Forex markets. Even though your volume levels may not be exactly accurate, it certainly will highlight for you when there is significant changes in volume. So to answer that question, yes, it will work as long as you are on a time chart. Can you see? Choose higher buy volume and sell volume equal lower. Okay. The question about higher buy and higher sell, you have to remember that we don't look at higher buy and higher sell per se. We look at the volume at the bid and the volume at the ask. And the assumption is when more trades are taking place at the ask, that there is greater demand and that is a bullish market. If in fact we are seeing more volume at the bid, then there is selling pressure and prices are likely to drop. And that's how we basically identify whether it was selling or buying volume. But in reality, you can never really know, because somebody could also be buying at the bid rather than at the ask. All right. I will invite you to send any additional questions to me directly. My email you have here on the slide. And all I ask is just give me some time to respond. It may take me a few days because I usually get lots of emails. Other than that, I will thank you for joining us today, and I will wish you the very best of luck with all of your trading, and I look forward to joining you again in another one of our Market Profile Market Delta 101 series.
John, before everybody departs, I wanted to just say a few comments. One was there was a question on, I think it was Danny was asking about the volume imbalance indicator. That's something new that's in the new edition of Market Delta charts, which we plan on another webinar on that probably next week or the week after. So I guess pay attention to your emails, and we'll be talking more about that specific indicator. And certainly it could be applied to these same concepts. You could even apply the KVT and some of these things to it. And then lastly, I'm going to share my screen out. I want to make sure everybody is aware you can, hopefully you can hear me still, if you want to try out a Market Delta charts, that's the product you need to really do everything that Dr. Keppler did today. So the website, you can just visit MarketDelta.com, or you can just visit this particular page. And in fact, I will just show you, I'll just kind of walk you through how you can get a trial. We offer a 14-day free trial, and that will allow you to really start applying and playing around with some of these concepts. So if you just were to visit our website under products and then just choose Market Delta charts and just click free trial. Okay, once you do that, what you need to do is simply select your data service that you would plan on using, and if you need any help in that decision process, you can chat, email, or call us, or just click this link and see the differences between them. We support a lot of different data sources, so we try and give you a lot of choices there to choose. Other than that, just click submit, and we'll go ahead then and send you instructions for getting everything set up. Now, if you've already had a trial, if you get an email back that says you've had a trial and you've specifically attended this webinar, just email us, sales@MarketDelta, put Keppler trial in the subject, and let us know what data feed you plan on using so we can send you the proper instructions. And through the end of this week, we'll go ahead and honor that, and we'll provide a second trial as long as it hasn't been in the last month or so. So hopefully that gives everybody a chance to be able to just transition, get set up with the charting, and begin playing around with market profile, volume profile, the footprint, the KVT. All of those things, we provide good information on the website that you can search right at the top of our home page. If you were to search KVT, or if you really want to, you can dig in right here. If you just want to start learning more under Learn Footprint or Learn Market Profile, we have some introductory resources there that are available and allow you to start to learn about both of those. So I want to thank Dr. Keppler for the time today. We really appreciate it. Appreciate his time and the effort he puts into these. I encourage you to reach out to him if you have any questions. He's a great resource, and we certainly appreciate it. Thanks, John, and it's see. Looks like there's a few more questions. What was the new indicator called? The new indicator was volume imbalance. Volume imbalance. All right, John, did you have any closing comments, or was that it?
No, that's it for me.
All right, we'll wrap it with that. Thanks, everybody. Look for a link to the recording tomorrow. Bye.